You're listening to 2025 The Final Drive, What You Need to Win with David Hayes. David has been providing financial advice for over 25 years and is the host of Your Money with David Hayes radio show and podcast. And now, here's David Hayes.
Welcome to podcast number 22 of 2025, The Final Drive, What You Need to Know to Win. Now listen, a lot of people want to take money out of retirement accounts early, right? What does that mean? Typically before 59 and a half. But they want to do it and avoid a tax penalty. Well, if you haven't got it by now, I'm all about tax avoidance. Now, evading is a wrong thing to do, but avoiding is your constitutional obligation. Not just right, it's an obligation to do everything you can to pay the least amount of tax that's absolutely necessary. Okay, so there's a couple different ways that you can get money out of a retirement account tax-free prior to 59 and a half. The most common is what's referred to as IRS Code 72T. What is 72T? It's called substantially equal payments. They have very strict rules on how you get the money out, but basically you have three methods that you can take it out. An annuitization method, an amortization method. I mean, there's three. You can look it up if you want. That's not the important part. Then you have to use some kind of an assumed interest rate, 120% over the midterm capital rate. What in the heck's that, Dave? Well, right now that's running about 5%. So you basically use your life expectancy. So if I'm 40 years old, 45, 50, 55, doesn't matter, you have a life expectancy. You pull out the old single life table and say, okay, it looks like they expect me to live 30 years at a 5% assumed interest rate. What would be my annuity payment? So that is the substantially equal payment. Now, what's the equal mean? You have to keep it the exact same amount for 5 years and until 59 and a half for it to be considered a no tax penalty. This works both with Roth. This works both with traditional IRA as well. Now, the Roth is a little bit different. So you have to keep it. You have to keep it for 5 years. You have to keep it the same. And the catch here, before I get to the Roth, the catch here is that if you mess it up, if you decide not to take it or you take more, then all of it will have a 10% penalty. So you're in the fifth year, right? And you say, I really don't need it. I won't take it. Or I'm going to take more. Then you have now become a target because you will pay 10% penalty on everything you took out before. Now, if you want to take some money, but you don't want your entire IRA to be tied up with a 72T, you can separate them out. I want to take income from this one as a 72T and leave this one alone. That's completely fair. The other piece to this is you can't transfer money in or out. So once the money starts, you can't say, I'm going to transfer it to another IRA. On paper, it would look like it's tax-free, but it disrupted your 72T payments, and therefore the 10% penalty comes into play, and not just on that distribution, but on all previous distributions. So Roth work exactly the same way. However, I wouldn't use a 72T for a Roth because of the order of taxation on the money. So when you own a Roth IRA, most of you know from listening to this or other things that you have a 5-year rule. So you put money in, you can't take it out for 5 years until 59 and a half for it to be tax-free. Tap the brakes before you do anything. Tap the brakes. Because if you would like to talk about how we can help you navigate these complicated issues, please go to cfci.us. Contact us there. Set up your complimentary call. I did one today. It was 20 minutes long. It was great. Helped out some folks. Or give us a call at 812-334-3190, and I promise you, we will make it happen.
Thank you for listening to this podcast. The clock is ticking. Each decision that is made today will put more money into your pocket or leave you worried about your financial future. The time to prepare is now. The time to eliminate risk was yesterday. Let's partner to help those around us to make decisions that empower their financial future. If you would like to book David for a speaking event, please contact CFC at cfci.us. You can purchase his book, 2025 The Final Drive, into www.cfci.us and clicking on 2025 The Final Drive.